mission here is, well, it's pretty sharp and clear. We take these complex, sometimes really overwhelming topics, and we distill them down.
Right down to the absolute essentials.
Exactly. We give you the knowledge you need, but we do it fast and we do it thoroughly. And if you are here with us today, it's probably because you want to know about one of the most advanced and, frankly, one of the most mystifying forms of technical analysis ever created.
That's absolutely right. Today, we are strapping in to explore the world of W.D. Gann. And, this isn't just about reading a candlestick chart or tracking a simple moving average.
Oh, not at all.
We are talking about a methodology that connects ancient mathematics, sacred geometry, time cycles, and price action in a way that continues to baffle, to inspire, and maybe most importantly, to generate some really passionate debate among traders, even a century later.
Absolutely. So the mission for this deep dive is to pull out the most important insights from Gann's approach. We're going to focus specifically on his most intriguing and, I think, visually arresting tool, the square of 9. Think of this as getting a shortcut into the mind of a legendary, almost mythical figure, someone who claimed to have cracked the universal code that governs how markets move. We're going to go beyond just, a basic description and really dig into the principles that make it all work.
And that legendary figure is William Delbert Gann. Born in the late 19th century, he was a hugely prominent market theorist and a very successful trader in the early part of the 20th century.
And what really cemented his status,
Yeah.
right, both as an icon and also as a source of controversy.
It was his truly unconventional approach. He didn't rely on the things we think of today, like corporate earnings reports or economic data. No, he relied on mathematical relationships, geometry, ancient mathematics, and yes, even incorporating astrological principles into his work.
Which is where a lot of people check out.
It is, but he believed they reflected these deeper inherent laws of the universe.
I think we need to establish right up front why people still listen to Gann, especially with the esoteric nature of his work. Our sources really highlight a pivotal moment, his documented 1909 trading record.
Yeah, that's the story that always comes up.
Right. He reportedly took $300 and turned it into over $25,000 in just a matter of months. I mean, that's a staggering feat for the time, and it required hundreds of profitable trades.
That historical success record is the anchor point. It's what justifies this deep dive into what are, let's face it, some very complex theories.
It's the reason his theories are still revered by some. His results just demanded attention.
And this complex methodology is precisely why his work is so influential, but also so controversial. People either see him as a genius who, cracked the code of predictable cycles, or they see him as a clever mathematician who used highly selective examples to present his work.
But the consensus among those who really study him is that the methodology is rigorous. Even if its foundations, well, they challenge conventional thinking.
They certainly do.
So here's the path we're taking today. We are going to nail down the core philosophy, what was the radical claim Gann was making about market predictability. Then we're going to dive deep into the mechanics, decoding the actual structure of the square of 9.
And we'll get into the details like the cardinal and fixed crosses and how this mathematical spiral actually functions.
Yes. Then we'll look at modern applications, walk through a really detailed case study, and crucially, we have to address the significant challenges and the controversies surrounding this entire system.
And as we proceed, it's important to remember that we are providing these insights purely from the source material. This content is for educational purposes only.
Of course.
Trading financial instruments involves significant risk of capital loss, and this discussion is definitely not financial advice. We're purely here to help you understand the concepts behind this fascinating approach to market analysis.
Okay, let's unpack this. If you strip away all the charts, the spreadsheets, the tools, what was the radical core of Gann's belief system? What set him so far apart from everyone else at the time, and frankly, from most modern market theory today?
The foundational belief, the absolute bedrock of Gann theory, was that financial markets operated in predictable cycles that could be identified and traded upon.
So he completely rejected the random walk idea.
Fundamentally rejected it. Gann asserted, quite boldly, that there's nothing new under the sun and that markets move according to a fixed mathematical structure. He believed the past contained the key to the future.
but not just in a history repeats itself kind of way.
Not at all. The key was hidden in specific mathematical and geometrical relationships that repeat with what he would call astronomical regularity.
That is a staggering claim.
Yeah.
I mean, you think about our highly volatile, algorithm-driven, seemingly chaotic markets today, and the idea that they're following predictable cycles. That flies directly in the face of what a lot of modern financial theory tells us. The efficient market hypothesis, the idea that all information is already priced in, making prediction impossible.
Exactly. Gann is suggesting something else entirely, that the market structure is, in a way, preordained by universal laws. And the materials he used to identify these cycles, that's what highlights the esoteric foundation of his work.
The geometry, the math, and the astrology.
Right. The sources note he relied heavily on all three. This is why his work is often labeled esoteric. It suggests that universal laws found in nature, in ancient math like Pythagoras, and in the rotation of planets are mirrored in the movements of financial instruments.
Okay, let's be blunt here. The second we mention astrology to 99% of our audience, they switch off. They assume it's pure fantasy. How do the sources justify integrating celestial movements into a financial model without sounding like they're, reading tea leaves?
Yeah.
The justification, according to Gann, isn't mystical, it's cyclical and mathematical. He wasn't tracking daily horoscopes or anything like that.
So what was he cracking?
He was tracking the precise angular relationships between planetary bodies. He used them as massive, observable clocks for extremely long-term time cycles.
Clocks, I like that.
The 360-degree rotation of the Earth around the Sun, for example, forms a perfect mathematical cycle. Gann's belief was that if time moves in cycles, and financial history proves that booms and busts are cyclical, then the geometry of astronomical cycles should align with significant turning points in the market.
So it's an attempt to link the observed cosmic order to the perceived market chaos.
That's a perfect way to put it. He wasn't just looking at quarterly reports. He was trying to find the cosmic clock dictating the market's timing, using the most reliable cycles he could find: planetary movement.
And this highly complex methodology is why his work is so influential, but also so controversial. The genius, according to his followers, lies in the rigorous application of this structure.
The structure is everything. His entire theory is built on three fundamental principles, three pillars that really emphasize the deep interconnectedness of time and price. And it's crucial we understand these three because they define the scope of every tool he created, including the square of 9.
Okay, let's define those three pillars in depth. We'll start with number 1, price. What's the geometric relationship that Gann was talking about, and why is the 45-degree angle so important?
Gann believed that price movements follow specific geometric angles, and these angles relate directly to significant turning points in the market. He visualized price and time as having a one-to-one relationship.
A one-to-one relationship.
Yes. Think of a 45-degree line drawn on a chart. If you set the scale correctly so that 1 unit of price equals 1 unit of time, that 45-degree angle, often called the 1-by-1 angle, represents perfect balance.
So the angle isn't just a line, it's a forecast. A forecast of the expected sustainable rate of change.
Precisely. If a stock is trending up along that 45-degree angle, it's considered healthy and sustainable. If it trends steeper than 45 degrees, say a 2-by-1 angle, it's moving too fast. It's overbought and, well, mathematically it's due for a correction back to that 45-degree line, or even a reversal.
And if it's flatter?
If it's moving flatter than 45 degrees, it's underperforming, it's weak. The geometry provides this natural, predictable path of motion. Any deviation from that path signals an imminent change in momentum or trend.
So it basically turns market analysis into a geometry problem.
It does. It's all about measuring geometric relationships.
That's a very structured view. So if price tells us the geometric trajectory, then the second pillar, time, must be the variable that synchronizes everything.
That's correct. The second pillar is time. Time cycles in Gann theory are absolutely critical for predicting when a market reversal or significant price move is likely to happen. For Gann, time wasn't just, the passage of days. It was a measurable force that exerted pressure on price.
And these cycles are measured from what? From major highs or lows?
Yes, from the anchor points. And they're often related to natural geometric divisions of a year or even a decade.
This is where the mathematical and cyclical ideas really merge. He was looking for key time periods, measured from a significant prior high or low, that align mathematically with key points in a cycle, predicting a turning point. It's almost like predicting high tide based on the moon's cycle.
That analogy holds up very well. time and price had to align, or square as he called it, for a massive movement to occur.
The squaring of time and price. That's the ultimate goal.
It is. For example, if a major low occurred on day 0, a trader might look for the 90-day, 180-day, or 360-day mark, the full cycle for the next major turning point.
And if a stock hits a specific geometrically derived price level on one of those predetermined dates,
Then that convergence is considered a high probability reversal point. Time dictates the when, price dictates the where.
which brings us, quite naturally, to the third pillar. Pattern. How do all these complex interlocking variables resolve into something you can actually trade? That resolution, I assume, is where pattern comes in.
Exactly. The belief here is simple but incredibly powerful. Historical patterns tend to repeat themselves. This allows traders to anticipate future price action based on past behavior.
But this isn't just classic chart pattern recognition, like a head and shoulders pattern or something.
No, it's much deeper. It's the belief that the mathematical ratios and the time cycles that define past booms and busts, the entire geometric structure, will inevitably reappear in the present and the future.
So the three pillars work together seamlessly. Price follows predictable geometric angles, time dictates the cyclical turning points, and pattern confirms that these geometric cycles are inherent, repeatable features of market behavior.
It's a unified, comprehensive system. It's designed to forecast the precise convergence of time and price in mathematical space.
Right.
And to apply these theories to actually draw these angles and measure these intricate cycles, Gann developed several specific tools. The source material mentions the Gann angles themselves, something called the hexagon chart, and of course the primary focus of our deep dive today, the square of 9.
Here's where it gets really fascinating. When you first look at the square of 9, it looks less like a financial chart and more like, I don't know, a mysterious ancient mathematical artifact. Maybe a Babylonian calculator or a complex mandala.
It really does.
How does this mathematical spiral actually work? What is its specific geometrical objective?
To define it simply, the square of 9, or the Gann square as it's also known, is a sophisticated mathematical and geometrical tool that maps numbers onto a spiral structure.
And its purpose?
Its explicit purpose is to forecast specific, significant price levels, to identify potential support and resistance zones, and to pinpoint precise market turning points based on these angular divisions.
And the mechanism for doing that is this incredible visual of a spiral of numbers.
Mm-hmm.
I think we need to walk through the literal step-by-step structure of how this spiral is built, because understanding the geometry is the only way to understand its forecasting power.
Absolutely. You need to visualize this chart as a tightly wound spiral of integers. The structure begins with the number 1 right at the center.
1 is the anchor, the starting point for everything.
It is. From that center, the numbers move outward, increasing one by one in a clockwise direction. The square layers are completed by squaring the numbers along the diagonal, which is where it gets its name, the square of 9.
Okay, let's clarify that expansion mechanism. The numbers spiral, but it's not random. It expands based on squaring numbers, which
Right.
defines the layers, right?
That's a vital point. The spiral is structured around odd and even integers. The first layer, or the first full revolution, ends at the number 9, which is 3 squared.
Oh.
The next layer ends at 25, which is 5 squared. The one after that ends at 49, which is 7 squared, and so on. Every time you complete a corner of the spiral and hit a perfect square of an odd number, you've completed one full revolution or layer of the square.
So that mathematical progression is what gives it structure. It ensures that all the numbers located along the same axis, meaning at the same angle from the center, share some kind of harmonic, or as Gann would say, vibrational relationship.
Exactly. So you have a linear progression of integers 1, 2, 3, 4 mapped onto a highly structured circular geometric space defined by the squares of odd numbers.
And in the context of trading, a trader would anchor the center number or any number in the square to a significant market price, say $50. Then all the surrounding numbers represent price levels that are related to that anchor point.
That mapping is crucial. If you start your analysis with the number 100 as the anchor price, then all the numbers surrounding it represent price movements. The distance a number is from the center, or its precise position on the square, tells you its geometric relationship to that starting price. But the core mechanic, the real power, comes from the angles.
The power of angular relationship. So Gann believed the relationships between numbers in the square could identify these key price points for reversals or breakouts. But why angles? Why not just linear movement? Why 360 degrees?
Because the market, like the square itself, is inherently cyclical. It reflects the natural cycles found in time and geometry. These relationships are measured based on their angular relationship to other numbers in the square.
Which is why it's a 360-degree circle concept.
It is. If a number sits 90 degrees away from your starting point, it means that price level is positioned at a harmonic mathematical distance from the anchor price, which Gann linked to potential market behavior. It's the idea that energy builds and dissipates along these geometrically significant lines.
Okay, so let's establish the key geometric divisions. We have 360 degrees, which is broken down into two main crosses, right? The cardinal cross and the fixed cross. These are the most important forecasting lines.
Absolutely. Understanding these two crosses is central to applying the square of 9. First, you have the cardinal cross.
These are the horizontal and vertical axes.
Yes, the numbers that lie on the north, south, east, and west axes. These correspond to 0 degrees, 90 degrees, 180 degrees, and 270 degrees. These angles are considered the most powerful and tend to represent major support and resistance levels.
So hitting a 180-degree opposition, for example, would signal a full reversal of sentiment from where you started.
Precisely. If I anchor a major high at the 360-degree position, the price level that lands at 180 degrees, directly opposite that high, is forecasted to be a major low point, a precise geometrical reversal target.
And then there's the fixed cross.
Right. The fixed cross falls on the 4 diagonal lines running through the square. These correspond to 45 degrees, 135 degrees, 225 degrees, and 315 degrees.
And these are secondary.
You could say that. While the cardinal crosses often represent major pivot points, the fixed crosses often indicate secondary support and resistance, or they show the ideal trajectory and velocity of the trend. They act as the natural channels for price movement.
I think if you're trying to grasp this, the aha moment is realizing that Gann is taking these seemingly random linear price movements and mapping them onto this precise geometrical cyclical structure. It sounds like we're shifting from conventional analysis into a kind of financial metaphysics.
Well, that's where we have to introduce the concept of vibration, which is essential to Gann's more esoteric work. He believed that every number, and therefore every price, vibrates at a specific frequency, a fixed harmonic relationship with all other numbers.
And the square of 9 is a visual representation of those relationships.
It is. When a price moves from, say, $100 to a geometrically related price, like $121, that shift corresponds to a vibrational frequency change. The angular alignment means the price has achieved a state of square, signaling maximum tension or exhaustion, which forces a reversal.
So a reversal isn't random. It happens when a price completes a specific geometric vibration by hitting one of these cardinal or fixed cross angles relative to its previous high or lows. It's an attempt to find the underlying rhythm of the market.
That's a great way to put it. The tool is essentially a calendar clock where 360 degrees represents a full cycle of both time and price.
And this inherent structure is what allows for the connection with the Gann angles we mentioned earlier.
Correct. The square of 9 is rarely used in isolation. It's more like a coordinate system. It's used in combination with Gann angles. When a trader identifies a significant price level on the square, let's say a major low at $100, they know the theoretical angular price targets.
Like $110 at 45 degrees or $121 at 90 degrees.
Exactly. They then draw these specific geometric angles, 45 degrees, 90 degrees originating from that price point on a regular price chart to forecast future movement. The square helps locate the precise numerical targets. The angles help predict the velocity and the path to get there.
It's synthesizing the structure of numbers with the structure of time and visualizing the resulting trajectory.
Precisely. This deep dive into the philosophy and structure really clarifies why this tool feels so powerful yet so dense. But the listener needs to know, how do you actually use this thing in a real-world scenario? Let's move to the practical applications and see how we go from a spiral of numbers to an actual trade.
Okay, so what does this all mean for a trader trying to use the square of 9 today? If I have this spiral chart in front of me and I've anchored it to a relevant price, what are the common actionable applications? Let's start with the big one, identifying price targets.
The applications are really focused on forecasting specific price levels and timing your entries and exits. The first and most common application is identifying key support and resistance levels.
This is the most straightforward to use.
It is. The process starts with selecting the anchor. Let's say a stock hit a major pivot low at $50. A trader anchors $50 on the square, treating it as the starting point. They then calculate the prices that sit at those critical angular relationships 45, 90, 180, and 270 degrees away.
Okay.
So for instance, if $50 an anchored, the price 90 degrees away might be calculated at $56.25, and the price 180 degrees away might be $63.25.
So if the market starts rallying from that $50 low, the theory forecasts that the first major hurdle, the first significant zone of resistance where momentum will be tested, will be that 90-degree price of $56.25.
Exactly. The market is expected to respect that geometric alignment. Traders use the square to mathematically calculate where significant support or resistance is likely to occur. These are objective targets based on the structure of the numbers, not subjective judgment.
And if the price breaks through that 90-degree level,
Then the next target, $63.25, which is the 180-degree price, becomes highly probable.
that sounds like a powerful way to set targets. But how does this system account for, say, a volatile tech stock versus a slower-moving commodity? The scale must have to change, right?
It does, and that's where the beauty and the complexity of Gann's work really lie in the scaling. The core principle is always the same, but the trader has to adjust the numerical value of the incremental steps in the spiral.
Can you give an example?
Sure. For a highly volatile instrument like Bitcoin, the difference between the number 1 and the number 2 in the spiral might represent $100. For a slow-moving bond future, it might just represent a single tick. The skill lies in anchoring the correct starting price and applying the right scaling factor for that instrument's volatility.
Okay, application number 2. This takes us back to that critical second pillar of Gann theory, time. How does the square of 9 predict market turning points based on time cycles? I mean, the spiral is numerical. How do you use it to calculate dates?
We have to reinforce Gann's foundational belief here. Time is a measurable force, so the square of 9 can be used two ways. For price targets, which we just discussed, and for time targets, which are the dates.
So you can correlate the positions on the spiral to calendar days.
Exactly. Calendar days, weeks, even months, relative to a starting point. For instance, if a major low occurred on January 1st, let's call that day 1, you anchor that date on the square. You then look for subsequent calendar days that align with the critical angles. 90 days, 180 days, 270 days.
So 90 days from January 1st would land around April 1st.
Right, and the theory predicts that April 1st is a date where a significant market reversal or inflection point is highly probable, regardless of the price action immediately before it.
This synchronization of time and price, the squaring of the two forces, that's the ultimate goal. You could potentially know that a breakout is due on a specific calendar date because the time cycle dictates maximum pressure, even if the price is just moving sideways on the chart.
Correct. This allows a trader to anticipate when the market clock will strike, not just where the market will be trading, and that can inform optimal entry or exit times.
Which leads us right to the third key application, combining the square of 9 with Gann angles for better accuracy. We've heard that stressed a few times now. Why is using both tools at the same time so much more powerful than just using one?
Because using both allows traders to forecast both time and price levels simultaneously. And that significantly increases the statistical confidence of the trade setup. The method involves drawing the geometric Gann angles from significant price levels and then analyzing their relationship to the numbers on the square of 9. They validate each other.
So this is the fusion of all three principles. The square gives you the numerical target, which is price. The angle confirms the trajectory, which is pattern. And the date alignment provides the confirmation, which is time. It's like triangulation.
Precisely. When you draw a 45-degree angle from a major low, that angle plots the expected path of the rally at its most balanced rate. If that 45-degree line intersects with a price level that the square of 9 has already flagged as a major 90-degree or 180-degree resistance point, you have double or even triple confirmation.
So the geometry on the price chart confirms the geometry in the number spiral.
It does. And traders use this powerful combination to identify high-probability turning points and develop these comprehensive, highly specific trading strategies that define entry, stop loss, and profit targets with a kind of mathematical objectivity.
That makes perfect sense. The tools are completely complementary. The square gives you the points on the map, and the angles give you the high-probability highways connecting those points. It's a highly sophisticated forecasting system.
It is, and it demands a high degree of mathematical discipline, which is probably why it remains a bit of a niche discipline today. And while the concepts are fascinating, the real illumination comes from seeing it in action. Let's dedicate some serious time to our detailed case study of Mark the Trader to really ground this complex theory in a specific scenario.
Yes, let's transition to reality and complexity. We have this detailed case study about a trader named Mark who successfully applied the square of 9 to a volatile tech stock. This scenario, I think, provides the perfect illustration of the sequential, disciplined application of the theory, from the initial observation all the way to execution.
This case study is critical because it forces us to walk through the decision process. It wasn't just luck, it was a disciplined application of the geometry.
Okay, so let's set the stage. The pre-analysis. Before Mark even calculated a number, he was observing the market structure. He was monitoring a highly volatile tech stock that had just completed a significant, very fast rally.
Right, and the stock was showing signs of momentum exhaustion, but buyers were still pushing it higher.
That context is key. The extreme volatility and a potential top is why he chose to apply Gann theory in the first place. It works best on these clear, explosive market movements.
So he needed a solid anchor. Which brings us to step 1, identifying the anchor. Mark identified a significant recent high of $150. That figure, $150, became his starting point, the 1 or the 0 degree point, for all his subsequent calculations on the square of 9.
And that choice is crucial. In Gann theory, every measurement has to originate from a significant market pivot point, a high or a low that fundamentally shifted momentum. That $150 high was his geometrically perfect anchor.
It was. So now we're at step 2, forecasting the reversal using the 45-degree clue. Mark takes $150, anchors it in his square, or more likely uses a calculator derived from the spiral geometry, and he begins calculating the key angular relationships. What did the square tell him?
His calculations pointed directly to $165 as a critical resistance level, a point where a reversal might occur.
So, if $150 was his anchor, he calculated the numbers spiraling outward. He found that $165 had a crucial 45-degree angular relationship with the $150 price level.
That's the numerical target derived from the angular position. The 45-degree relationship is one of those fixed cross angles, signaling a powerful line of resistance along the natural trajectory of the trend.
Climbing 45 degrees geometrically led directly to $165 numerically. The market was expected to respect that mathematical relationship, suggesting that $165 represented a temporary completion of that ascent cycle.
Now, let's pause here for a moment of genuine critical analysis that Mark himself would have done. He wouldn't have just stopped at the 45-degree calculation.
No, absolutely not. He would have checked the subsequent targets to understand the full risk spectrum. The 90-degree resistance level, for instance, might have been calculated at $175, and the 180-degree opposition target might have been around $195.
Okay, so he had 3 potential resistance zones, $165 and $175. Why did he choose to act on the $165 target rather than waiting for a potentially higher price?
Because of his pre-analysis. He noticed the underlying momentum was already weakening, which confirmed the possibility of a reversal at the first major geometric hurdle. The $165 level, representing only a 45-degree turn, was the most conservative and highest probability initial turning point.
Especially given how fast the stock had run up.
Exactly. He entered a tight short position, respecting that initial geometric resistance.
Okay, step 3, executing and profiting. So, armed with this forecast, Mark waited for the stock to approach $165. What was his execution logic?
As the stock moved toward his calculated target, Mark observed 2 things. First, the price was hitting his calculated geometric level. And second, simultaneously, the volume was fading, which signaled that buyer enthusiasm was running out.
So when the price hit exactly $165,
he entered a short position. He anticipated the stock would reverse downward in respect of that angular resistance, and his stop loss would be placed just above the next level, the 90-degree level at $175, to limit his risk if that 45-degree resistance failed.
and the execution paid off. The stock immediately ran into heavy selling pressure at $165. It reversed course, and over the next few days, it fell right back to $150.
Allowing Mark to exit his short trade and realize a significant profit. The square of 9, in this instance, provided a precise entry point, $165, and a precise exit target, $150, based purely on angular mathematics.
But he wasn't done yet.
No. Step 4. Confirmation with Gann angles was his final step. This was to increase his confidence and validate the trade decision using that complementary tool.
So how did the angles confirm the square's calculation?
Mark drew a 45-degree angle directly from the initial $150 pivot level on his standard price chart. Since $165 represented the 45-degree point on the square of 9 relative to $150.
Drawing the 45-degree Gann angle on his chart visually confirmed that $165 wasn't just some random number.
Exactly. It was a point lying exactly on the calculated trajectory of maximum expected resistance and velocity change. This combination, the numerical target from the square confirmed by the angular line on the chart, validated his decision to enter the trade at $165.
It's a powerful demonstration of the synthesis required in Gann theory, using two separate tools that reflect the same geometric principles to confirm the forecast of both time and price. But we have to balance this powerful story with the hard realities of using the system. It is not without some significant challenges and controversies.
That's absolutely necessary. While Mark's case study is compelling, traders have to be aware of the high barriers to entry. The first major one is the complexity barrier. These methods require significant study, discipline, and practice to apply them effectively. You have to not only understand the geometry, but also that crucial aspect of correct scaling the price-to-time ratio, which can change depending on the instrument and the time frame.
I have to pause here. Just setting up the anchor price, determining the correct scale, and then calculating the 45-degree difference. That sounds like serious specialized homework. Is this system truly practical for a daily trader who isn't a dedicated full-time mathematician?
Historically, no. It required intensive manual calculation and specialized charts. Today, software does simplify the construction of the square of 9, but the interpretation remains complex. It's not a plug-and-play analysis. It requires deep mathematical understanding.
A high bar for entry.
A very high bar. And that complexity contributes directly to the ongoing controversy and validity challenge. We have to acknowledge that Gann's work is highly controversial. While successful traders like Mark use it, many traditional quantitative analysts question its validity in modern, digitized, high-frequency markets.
They argue the connection between geometry, astrology, and price action is just coincidental,
right,
or based on confirmation bias.
He's seeing what you want to see because you drew the line there.
And we are impartially reporting the sources here, and the sources confirm this debate. Some traders question its relevance, while others believe that the core cyclical nature of markets, regardless of trading speed, will always adhere to these foundational mathematical relationships.
Furthermore, there's the persistent problem of ambiguity. The inherent difficulty is that the square of 9 and Gann angles can produce multiple potential outcomes.
Right, like in Mark's scenario, he had 3 potential resistance levels: 45, 90, and 180 degrees. The system gives you targets, but it doesn't always tell you definitively which one the market will actually stop at.
That's a critical challenge. Having multiple potential outcomes means a trader still needs discretionary judgment or supplementary analysis like reading momentum and volume to choose the most likely scenario.
The tool itself doesn't give you a single clear answer. The geometry provides the map, but you still have to read the traffic.
Exactly. The system is deterministic, but its application requires human discretion. Which brings us to the mandatory mitigation strategy that's stressed throughout the sources.
How do you mitigate this?
To overcome these challenges, traders must combine Gann theory with other established technical analysis methods. You can't rely solely on the geometry. You have to confirm what the square tells you with volume analysis, classic chart patterns, moving averages, or even macroeconomic context.
And most importantly, regardless of how confident the math makes you feel, you must maintain proper risk management practices.
Absolutely. The most perfect geometrical calculation in the world cannot protect your capital from an unforeseen geopolitical event, a regulatory change, or a flash crash. Discipline and capital preservation have to override pure mathematical forecasts.
That's a crucial point to end on for the analysis.
It is. The tools offer powerful forecasts, but they demand discipline and a recognition that even W.D. Gann himself faced market uncertainties, requiring constant adjustment and skill.
Okay, to summarize what we've unpacked in this deep dive, Gann theory and the square of 9 offer a radical, advanced framework for forecasting specific price levels and critical market turning points.
And they operate on the foundational belief that financial markets are predictable and follow these geometric cycles, which are determined by understanding the angular harmonic relationships between prices and time.
The tools themselves, the spiral of numbers starting at 1, moving clockwise, with these angular positions like the cardinal and fixed crosses dictating numerical significance, they're highly specific and rigorous.
They allow traders to identify potential support, resistance, and critical dates, all aiming to achieve that elusive squaring of time and price for optimal entries and exits.
The case study of Mark really demonstrated the potential power, anchoring at $150, using the 45-degree relationship to forecast resistance at $165, and then confirming that decision with the drawn Gann angle.
It illustrates how these complex, centuries-old mathematical principles can translate into actionable, high-precision trading decisions when they're applied correctly and diligently.
Which brings us back to the key takeaway reminder for you, the listener. The tools are powerful, they are complex, and they demand diligence. They must be used with discipline, extensive study, and supplementary analysis to overcome the inherent ambiguity and complexity. Before we leave you, we must deliver the necessary disclaimer with the gravity it deserves, exactly as it's presented in our source material.
Trading financial instruments involves significant risk of capital loss. Market volatility may result in rapid value fluctuations, and investors may lose more than their initial investment. The content provided is educational only, and consultation with a licensed financial advisor is required before making investment decisions.
With that necessary warning delivered, let's end on a final provocative thought for you to chew on that builds on the enduring mystery of this topic.
Consider this. Why does this centuries-old thinking, the application of ancient geometry, Pythagorean math, even astronomical cycles, continue to inspire such passionate debate and dedication among 21st century traders who are navigating these ultra-modern, algorithm-driven financial markets?
It suggests that perhaps the foundational laws governing cycles, resonance, and relationships, they transcend the speed of light and the complexity of modern technology.
So what universal patterns might we still be missing in our pursuit of financial predictability? Patterns that W.D. Gann believed were hiding in plain sight.
Think on that, and we'll catch you on the next Deep Dive.